Welcome to this session on innovation in payments, how to use the instant payments, onboarding, and beyond. I'm Daniele Savarè. I'm the Innovation and Business Solutions Director of SIA. And with me, I have Andrea Bacioccola, that is our Director of Payment Service Line, and Jeff Mulholland, that is the partner of the IBM Payment Center Canada. The agenda of today is very, very interesting, and apart from the introduction of SIA that I will do in a moment, we will focus on how to ease the adoption or accelerate the adoption of the instant payments, and we can share our experience that we have, we have done in Europe with the RT1, instant payment solutions. Jeff will describe a bit our partnership and how IBM is contributing with several aspects of this journey. And then we were saying also beyond the instant payment. So I will introduce a model and our vision on the central bank digital currency topic that is a very, let me say, burning topic in those days. So who is SIA? SIA is a European leader in managing mission-critical payment services across Europe. Mainly, we are serving mainly 4 customer segments: financial institutions, central banks, and corporates and public sector, focusing mainly on card and merchant solutions, digital payments, and also we have capital market and network solutions. We are mainly based in Europe, but we are serving 2,300 clients in 51 different countries. And we are roughly more than 3,500 employees. Now, so just to give you some key figures of what I'm managing every day with our people. So we are a critical infrastructure in Europe, managing more than 18 billions of payment transactions every year. We are managing the EBA clearing solutions with more than 4,800 participants. And also in the capital markets and network solutions, we are managing very, very complex systems because we are managing, for example, more than 50,000 deal proposal for the market and securities trading. So very high speed and high performance infrastructure. And I would also describe a bit the fact that we have roughly 120 nodes of blockchain that are up and running, and they are serving every day more than 600 users for a specific use case that I will describe later. But this just to give you an idea of the complexity and of the size of the business that we are managing every day. Especially on the payments space, we are covering the whole digital payment value chain. We are managing solutions that are for the commercial banks, and Andrea will describe later the payment hub, that is our digital payment solutions that could accelerate or will accelerate the adoption of the instant payments. We are managing on the right part, we are managing the account-to-account solutions, for example, with the instant payments in Italy, in some other European countries, and also in Asia. We are managing, as I mentioned, all the solutions for EBA clearing. We are managing the RTGS. Also, we are hopefully successfully completing the project together with IBM, also in Canada. And on the left side, we are managing also the SIANet, that is a secure network that is fully managed by SIAS and is enabling the access to all the European payments schemas. And also the Dcash and the SIA chain that I will describe later that will enable the next generation, let me say, payment infrastructure based on the central bank digital currency. But now, after this short introduction of SIA, I will leave the floor to Andrea, that will introduce you the instant payments accelerator and solutions that we have developed in Europe. Andrea.
Thank you, Daniele, and good afternoon, everybody. Thank you for taking the time and joining this session. It's my pleasure. It's my pleasure to be here. I'm Andrea Bacioccola, Director of Payments at SIA. And what I would like to do today, I would like to share with you some of the experience that SIA has had over the last 5 years in bringing instant payment solutions mainly to Europe, but also to other countries worldwide. Here is just a high-level overview of what has happened in different countries over the last, I would say, probably 5 years, starting with, or maybe a little bit longer if we take into account United Kingdom and the introduction of faster payments, which was a faster way, as the name says, to do payments. It wasn't. It's not real time, but let's say it's close to real time, in the sense that it takes from few minutes to a couple of hours. And then we moved into Europe, where in 2017 there was the introduction, as Daniele mentioned, of RT1, which is one of the implementation of the EPC schema for instant payments. And so then there has been, let's say, adoption of instant payment solutions throughout the world. And as a SIA, we had experience in Europe, in the Nordics, so in the northern part of Europe, in Europe as a central system, and then in the Nordics to offer real-time gross settlement systems to some of the Nordic countries. Then we had experience in South Africa, and recently with the Links project in Canada, together with IBM, we are working on the real-time gross settlement system for Canada. But so what is happening? What's our view? What we are seeing, and this is probably obvious to most of you, is that we see an increased demand for instant payment, moving really from what used to be the new normal to the next normal, and seeing really the demand for the adoption of cashless transactions and the need for an instant payment solution that could deliver on the promise of speed, trust, ease of use, security intended both as confidence that the payment has been done, but also confidence against fraud, and all of this putting together into a solution that is immediate and is irrevocable, but at the same time is also interoperable across banks, and especially if you think about Europe, across countries. Because Europe is a collection of countries with different rules and regulations in each country. And the fact that there have been a framework defined at the European level has certainly helped the adoption of those payment systems. Now, what I would like to share with you is literally 2 use cases, and just to share with you the experience that we had. On the first one, it's dated back in 2014, the initial idea of this use case, which is a service that SIA launched called Jiffy, and we launched it in Italy with Bancomat Pay. Bancomat Pay is the domestic card scheme with roughly 37 million of cards. And what we built was a solution to provide an instant payment user experience, even though the underlying channel was not. So what is the basic idea behind the Jiffy? Is that it's a P2P and person-to-person and person-to-business app that allows people to send money from one person to another using an app and using the mobile phone number as a user identifier. At the same time, it gives the possibility for merchants to accept payments based on a QR code. So you get to the store, you scan the QR code, and then you pay. And when we initially built the service in 2014, there wasn't an instant payment solution available in the market. There was the standard bank transfer, the SEPA credit transfer, that took between 1 to 2 business days to be executed. So what we built, it was a layer on top of this that gave to customers the experience of instant payments, whereas the underlying channel was not. So you could send money to another person, and the other person could see those money in their bank account immediately, although the bank transfer would take place a day later. And then when later in 2017 in 2016 was introduced the standard for the SEPA credit transfer instant. What we did, we evolved the Jiffy solution to be able to manage both instant and non-instant payments. But from a user perspective, it still remains the very same experience, that money are transferred immediately from one account to the other. Then, as I mentioned, in 2017, we worked as a technical provider of EBA clearing in setting up the infrastructure, the RT1 infrastructure, which means the overall central payment infrastructure to which banks can connect in order to provide to access the EBA real-time platform. And this is based on the EPC. EPC is the European Payment Council that developed a schema valid with the idea to have an interoperable solution across Europe. So we really worked with EBA to set up the central infrastructure, but at the same time, we also played the role of payment solution providers towards commercial banks, or in general towards PSP and financial institutions that wanted to get on board of this new platform. A platform that had the promise to deliver 24/7 service availability, management of the customer liquidity in real time, the irrevocability of payment, reachability, as I said, with the ambition to be across Europe. But there were also challenges. We did see a lot of challenges because, first of all, reachability is difficult to achieve when there is no obligations for banks to come on board of the solution. And then there was a difficult for banks that had legacy system to easily come on board and adopt the new solution. There were impacts on the core banking and other systems when everything had to be connected in a real-time world. So it was really a complex scenario. And in this next slide, we try to summarize at very high level really what have been our key takeaways from this experience. Because first of all, starting from the user experience, as I said earlier, there was one challenge, the reachability. Because you have certain banks that have adopted the scheme and they are part of the scheme, and other banks that are not. As I said, this was not mandatory. And it was not mandatory on the sender side, nor on the receiver side. So the only way that an instant payment works if when both the sender and receiver are connected to the platform. And then from a customer perspective, they only could know that they could do instant payments at the time of making the payment, or unless they knew the bank of the receiving party, and then they knew that that bank would support instant payments. And here again, to bridge the gap between what the platform offers and what is the expected user experience, we saw solutions like Jiffy as a technology bridge, allowing customers to have a real-time user experience, even though the underlying channel was not. But then at the same time, we also saw from a user experience perspective that every technical solution that banks had to implement to support real-time services also created a demand for value-added services. What does it mean? We saw a demand for the ability for the back-end systems and the front-end facing customers to have real-time liquidity management. For example, having the ability to show immediately to customers or to give immediately to customer a notification that a payment was received, even though the underlying core banking was not real-time. And then we saw also the need to offer the same solution through a multitude of channels, which could be app, web, and all of those had to have, as I said earlier, a simplified user experience that matched what was the expectation for a real-time service. But then, I mean, starting from the user experience, starting from what customers were expecting, from what banks wanted to offer to customers, we saw challenges in terms of technology. Because when banks had to face the choice of what we do with our systems, do we change everything? Do we only buy this component for real-time payments? But then if we take like a payment hub to do real-time, how is the payment hub going to talk, or how is the gateway going to talk with the rest of my systems? How can I minimize the impact? How can I manage complex real-time workflows? How can I have rules that are different for corporates and retail customers? For example, I would like to have my retail customers to change the amount of an instant payment, I don't know, from 300 to 500 euros. Because we started in Europe with limits of, well, now we are at about 500 euros for the first payments and up to 15,000 euros a day. But then corporates may have different needs than let's say retail customers. So corporates may actually have special agreements in place between them where customer or let's say retail limits do not apply. So how can a bank manage all those flexible rules and make sure that different needs are actually addressed? And to close on the technology side, we also saw challenges in, we saw banks, like large banks saying, oh, we want our platform. We have complex workflows. We want to make sure that everything works. But then there were also small banks that were like, we want a cost-effective solution because we want to be part of this instant payment experience. So what can we do? And then there was also the question of, do you want to be as a bank a direct participant, or do you want to be a non-direct participant, so going through another player already connected to the system? So in order to address these, what we did as a SIA, we define, well, it's not a product, it's probably more a solution, an end-to-end processing of system to process both domestic and cross-border payments. So, and we call this the SIA Easy Way Payment Hub, Now, I know this picture is rather complex, but the idea I wanted to give you here, let me see if I can get a laser, is starting from the basic functionality of an access gateway, so a component that will make banks, let's say, able to fulfill the instant payment schema and connect to different clearing houses. We have built a modular system that can manage for banks also business processes and the overall order management, so that there is a full interface from the access gateway to the actual channels. And the idea of this system that we have built is that it should be, let's say, a full end-to-end solution based on modular services and scalable in terms of being software as a platform, and then give the benefits for banks to time to market, reduce the legacy integration while offering value-added services. How did we do that? We did that by building a cloud solution with a zero coding workflow management. What does it mean? It means that the overall architecture is based on a series of microservices that then can be customized using a framework that we have defined. So banks can define without coding, really through a graphical interface, their workflows and connect different microservices and different pieces to be able to connect the legacy part of their system to the new world. And this also gave to some of our clients the ability to gradually migrate some of their legacy systems. Maybe they started with the real-time solution, and then gradually they moved onto a more comprehensive platform, allowing them to, let's say, modernize their banking infrastructure without changing everything at day zero. And just to give you a little bit deeper view on this, the overall Easy Way Payment Hub platform, we ended up developing into two major categories of functionality. The first one is indicated in blue, is what we call compliance, meaning all those modules that are needed as core modules to make sure you are compliant with the EPC schema, and at the same time you can offer a real-time user experience even though your systems are not. And just to pick here a couple of examples, we have implemented functionality like mirror account, fraud detection and prevention, payment reconciliation. Just as an example, what is the mirror account? The mirror account is the ability to mirror the account in the core system, so that even though the core banking might not be real-time, through the mirror account, we are able to provide a real-time user experience to customer, for example, giving them notifications of an incoming bank transfer, and then doing reconciliation later on when the core banking system updates, because, for example, it has a batch process that runs every 2 or 3 hours. And then for those that wanted to look at more, we also implemented a set of advanced functionality, as I said earlier, to do the order management and the business process. So really to be able to integrate with complex workflows that banks may have. Now, in total transparency, it's not that all clients or all banks need to go through this complex modernization of their systems, because we also had clients that they wanted like pre-configured workflows, and potentially they didn't even want to be a direct participant. And in that case, we were able to provide them a solution that was ready with minimum customization. But then there were also banks that they wanted to integrate the real-time payments into more complex systems. And here is where I would like to show to you the last slide in terms of technical architecture. But if you look here down at the bottom, we have EasyWay, and is our payment hub integrating into an open banking platform. So the ultimate view is the one where you combine a real-time payment hub with an open banking platform that can enable third-party service provider to actually use instant payment services and combine the instant payment services with everything that the new regulation of PSD2 has introduced in Europe. So the ability, for example, from your bank account to connect to another bank account using those credentials, and then be able to instruct payments directly from a mobile app of a TPP. So really the possibility, let's say, to scale and to cover the entire value chain of payments. And those, I believe, are some of the key challenges really that we have seen across Europe. So and if I really need to summarize into two, is that in order to provide a great customer experience for instant payments, it's important that we are able to give to customers the feeling that, that is not only the payment real time, but is also the rest of the systems. And sometimes, given that we need to deal with legacy backend and solution, there might be the need to find a technology that can bridge the gap between these two worlds. So as a SIA, the solution that we provide is a solution that is ready for both standalone and hybrid cloud, and is a solution that is a full stack open platform, active-active. It gives both as sandbox and SDK environments, and as I said earlier, it has a zero coding effort. And why I'm stressing this so much? Because it's really what we noted is that the key for success, at least for our clients in Europe, was that we needed a solution that could scale for both and address the needs of both large banks and small banks, banks with simple workflows and banks with complex workflows. And in this context, we partner up with IBM, and we have been working actually with IBM for a long time, and we have a collaboration and a global partnership to bring instant and mobile payment solutions to customers across Europe and outside Europe. And we have been working together, for example, in the Links project in Canada to bring the RTGS to Canada, as I mentioned earlier. And this brings me to an end. I know I said a lot of things in a short time, but I hope the main messages of the importance of user experience and a flexible platform and solution have also resonated with you, and are some of the challenges that you see today. Jeff, I will hand it over to you.
Thanks very much, Andrea. I don't have any charts for us today. I did want to talk about a few things though, so let me just go through those quickly. The first thing I want to talk about is the business impact of real-time payments. The second thing I want to talk about is the technology impact of real-time payments. And the third thing is just managing change. And I'll try and keep my remarks reasonably short. I know all of you have been to other sessions on real-time payments. All of you must have an interest in real-time payments. That's why you're here. But I want to give you some thoughts as for things to look for in your own business, things to look for on your own journeys that are of concern, and then how we can address those. And lastly, I'll talk briefly about the IBM SIA partnership as well. So the first thing with real-time payments before we even get into business and technology is Canada's behind. And I think you all know that. I think we all know that's why we're here. The systems that we run today, the processes we run today are 30-year-old batch systems. We have the appearance of real-time payments, and we've done an excellent job at having the appearance of real-time payments. But none of the payments we process today are real-time. As I said, we've done a very good job of masking that. What we do see, though, on the horizon, finally, is true real-time payments through the RTR initiative that Payments Canada is spearheading. And that will bring us up to par with what has been experienced in the rest of the world. And I think why this chat from SIA is particularly valuable is they've lived that experience for the last 10 years. So they know at a business level, at a technology level, at all the levels, what's required to actually support real-time. So let's talk from a business perspective first. I know that Andrea went through a number of business changes that need to happen in the system to support real-time payments, and a lot of business considerations you need to think of in terms of what business functions you're offering your customers, how your business processes need to change. The main factor with real-time payments is they're real-time. And Andrea really used two words that I always go back to when I think about real-time payments, and they're instant and irrevocable. And the last one is probably the most important. Today, from a business perspective, most processes from an FI perspective, even from a Payments Canada central bank perspective, are set up around the fact that if something happens, if something goes wrong, you have a day, maybe two, to fix the problem, detect the problem, fix it, and reverse it. With real-time payments, that goes away. Your payment is certainly sub-minute, ideally sub 20 seconds. And once it's done, it's done. Right? It is irrevocable. And from a business perspective, the processes you have in place really need to support that. There's not a lot of post-transaction activity that needs to be done. All those business processing transactions really need to be automated into the process flow, and understanding what to do there is absolutely critical. So that's one item I will leave for you to think about. And I know everyone has their own processes and process flows, but think about some of the long-running ones and some of the reconciliation ones. With real-time payments, that all has to be done in transaction. On the technology side, the technology changes are also critical because they need to go hand in hand with the business changes. A lot of payments today are, quite frankly, batch-driven. Right? We start off at a certain time, we run a batch of processes, we may run multiple batches. We may run a lot of batches really close together to give the appearance of real-time. But it's still batch driven. There's some error output. You have some chance to address those errors. With real-time payments, you need systems that are up and running 7/24 and that handle every error condition known with a known result. And that's a significant amount of work from a technology perspective. And I know everyone says their systems run 7/24 and everyone says their systems support real-time, but you really need to look at the entire technology chain end to end to confirm that, because the real-time system is only as good as the weakest link in the chain. And the third thing I wanted to talk to you about was change. And that's probably the most important thing, is that in order to go to real-time, the business needs to change, the technology needs to change. You need to make sure you're looking at all aspects of your system end to end to make sure they support the requirements of real-time. And that's not a technology problem, although there are technical considerations. That's not a business problem. The technology and the business for real-time payments need to work seamlessly. And if they don't, it will show. It will show in failed transactions. It will show in fraud. It will show in missed opportunities for value-added services. So when you're thinking about real-time payments, those are the three things I'd encourage you to think about on your journey to real-time payments. A little bit on the IBM SIA partnership, though, and why SIA is a great partner in this area. Europe is one of the leading areas in terms of real-time payments that we've seen. SIA, in addition to being a global company, obviously has a huge role to play in Europe's real-time payment systems, and they've learned from that. And they've learned some good lessons from that, and I'm sure they've also learned some painful lessons from that through the actual operating of the system. The good news in being late to the real-time payments market in Canada is we have the opportunity to take advantage of those learnings. So while Andrea has gone through some of the solutions and some of the products, I'd encourage you on your journeys, reach out to us at IBM, reach out to SIA, reach out to a number of partners who have global experience so that you can take advantage of those global learnings. Because there is a lot of painful lessons that have been learned through the move to real-time payments globally. And I know that's part of the reason everyone's here, and I know that everyone has done that, but I'd really like to reinforce that. And that's one of the reasons we value SIA as a partner of IBM, is because they have that experience and that learning, not just at a technology level, though their technology is fantastic, and not just at a business level. They do a combination of the two with a deep understanding of the payments business, as well as the technical background and the technical chops to effectively back that up to make sure that the two things work together. And we're proud to have SIA as a partner for that, but also happy to work with them on integration in Canada so that they have that local domestic footprint as well as in the US and other areas. So that really helps them extend their reach globally through this global partnership. And that's really why I'm here to talk to you today. I don't want to take up too much time because I'm really excited to get to the central bank digital currency portion of this platform, because that's really the next thing that comes after real-time payments is how we actually get to digital currency. So I'll hang around to take any questions at the end. But with that quick update, I'll turn it over to Daniele.
Thank you, Jeff. So where we are here, here we are. So basically, as you mentioned, just to probably bring all the participants to the same page here. So with the central bank digital currency, we intend to have a token that is representing an euro or a dollar, that is a physical assets, bytes, that are stored in a blockchain infrastructure. And basically, the idea is that, then we will see later in the details, but the idea is that this token has an owner, and basically just changing the owner through the platform, you are actually making a payment, because actually I own €1 or $1, and changing the ownership of this $1 is actually the same as you can send money to someone else. So basically, our vision, we think that it's a completely new digital payment systems, this concept, but is not changing or is not killing any of the current payment systems, but is rather a complementary and integrated solutions with the current financial market infrastructures. It should be open, inclusive, and sustainable for us. That means open. All the actors, all the providers, all the banks should be able to participate in this schema or in this infrastructure. Given that is a DLT-based, so is a digital ledger-based solution, is exploiting the full potential of this new technology, especially because it's able to implement a very particular concept, that is that the money is programmable through a smart contract. So basically, this actually is opening up the creation of hundreds of use cases that today are not possible unless you are writing tons of codes on the current infrastructure, on the current platform, let me say. And it should be preserving the role of the financial intermediaries, because the banks or all the financial intermediaries are at the heart of the financial systems, and the central banks, we will see later, will have a very important role, but they are enabling the distribution of the digital currency through the financial intermediaries. You know, our idea is that basically we have 4 different actors. So there are the central banks that are issuing and removing the central bank digital currencies from the platform, and they are governing all the infrastructures. They can select the technical provider and the intermediaries that can operate on the infrastructure, and they are defining the technical rules and the guidelines. The technical providers that are selected by the central bank, here you see the European Central Bank, because we are actually trying to work with the European Central Bank. But you know, the technical provider should deploy and operate the critical systems. So they are few, very specialized technical providers that are participating in the same infrastructure, and they are operating the infrastructure. The intermediaries are using the infrastructure provided by the technical providers, and they are differentiating their offering through innovative use cases that can use the central bank digital currencies features, and they are for sure distributing the central bank digital currency to all the users. That can be citizens, small business, financial institution as well, that can perform different type of payments. So these 4 different, let me say, roles or actors should have clear roles, and there will be a clear governance that can, let me say, orchestrate different roles in the infrastructure. So basically, you have one central bank for one country that has to own and exercise the core platform and all the shared network services that are basically confirming the transactions, are monitoring the transactions. The central bank can audit all the transactions and so on and so forth. While the technical providers should run the physical network and the nodes that are enabling the transactions, and the intermediaries should manage the relationship with the customers. So they are providing the mobile app, so the access to the central bank digital currency to all the users, and they are developing the innovative use cases based on the use of the programmable money applications. And as a SIA, what we have developed, so it's already working, we have the mobile app already. We have developed together with several banks, the Italian banking community, 4 different use cases that are already working, of course, in a sort of sandbox, in a sort of prototype way. And we have also the core platforms that can support all these transactions. And at the infrastructure level, we have all the components that are supporting the implementation of the blockchain that we call SIA chain. So we can run different type of blockchain. Here we have developed this on Ethereum. And then we have all the connectivity of all the nodes. So how it's working, basically here, there should be an animation that is not possible with this platform, but basically the central bank is receiving money, so fiat money, so the current digital money, and the central bank is issuing the central bank digital currency and is giving back to the intermediary. Let's assume that is a bank. The bank is giving this currency to the users that can make a payment. So actually it's just sending the payment to another users. So we have developed all the dashboard of the central platform that is enabling all this distribution of tokens, basically. And then also the app that with the same logic of the QR code. So basically you can scan the QR code and you are actually sending the digital currency to the wallet of the receiver of the payment. There will be a lot of features, so limits, because you can implement different rules if you are a retail customer, if you are a bank. So, for example, we have also developed a use case together with an Italian intermediaries to issue bond on the blockchain and basically to manage all the events directly with the digital currency, with the digital euro. And basically this will require to have higher limits of a retail customers, no? Because you have to issue millions of euro of a bond, and then you have to settle these all the events and all the securities, corporate action and securities operations. And therefore, all the platform is already implementing this type of different features. At infrastructure level, we have implemented the SIA chain, as I said. So basically, on the same infrastructure, we can support different type of blockchain. So we have a Corda already implemented, Ethereum that is supporting the use case of the central bank digital currency, and also Fabric Hyperledger that is supporting other use cases. I will briefly introduce also another big project that we have done with all the banks in Italy that is called Spunta project. Is actually the reconciliation of the interbank account that is done automatically through smart contracts, so bilateral smart contracts with different rules for each, let me say, banks that can set different rules based on the counterparty. And we have managed 300 million transactions in 1 year, more or less. So also the performance potential issue that most adopters were basically skeptical on the capability of the blockchain to support this level of transactions. We have done this exercise. We have done some fine-tuning and performance, let me say, test, but now it's working very well. We have developed several other use cases. So, for example, with the loyalty, with the inventory monetizations, but very interesting use cases here. And in particular, with the Spunta project, let me say that in a couple of years journey, we started in 17. The phase 1, and now is live with more than 600 users that every day are reconciliating or are defining the rules, are using the platforms. But the important thing is that 98.2, so is a huge number of transactions are automatically matched by the smart contract, and the remaining part are actually analyzed to integrate the rules in the smart contract. And, we have 120 nodes that are working every day and are processing these, millions of transactions. And it's working very well. So, and the important thing is that we started with this simple use case that is bringing a lot of value already to the banks, but it was key because now we have the blockchain infrastructure, let me say, in Italy available, and in fact the banks are already thinking to develop additional use cases that are DLT based, so basically using the blockchain capabilities to develop these new additional use cases. But they are also hoping that a digital euro or a digital currency is or will be, let me say, issued by the central bank in order to add additional use cases that I think that the value and the potential of the blockchain is really exploited if you have the possibility to move the value on the chain rather than to do the DLT exercise or DLT use cases. They are working. We prove that they are working very well and they are bringing value. But with the possibility to move directly the value on the chain, the value is exploding to me. And in fact, we have developed together with different actors, because as I mentioned when I started the discussion, we have created an open system in which several actors, you see here entity data or PwC, or there are two players in Italy, Reply and Fabric in Europe, sorry. And they developed together with the different banks, also the small banks, these 4 different use cases. So the safe return is, for example, a sort of escrow account. When you do an e-commerce transactions, actually the buyer is parking the $100 in an account, and when he receives the package or the good, is actually confirming that he received the good, and automatically the smart contract is crediting the seller. Or pay a split is enabling the split of transactions, or because you can program the behavior of the money, and based on some events on the blockchain, the smart contract can split the value and credit different beneficiary based on some condition. So you can pay and split. So basically you can collect 100 euro and then you can split to different several providers this 100 euro. Or for example, this is very interesting, the culture pass is actually the fact that you can, for example, limit the way you can spend the money. So for example, if you get some money from the government only for a purpose, so for example, you can buy books or a museum or whatever, you cannot buy, I don't know, DVD or whatever, I don't know, or goods, different goods, or beers or whatever. So basically, you have this capability to limit the fact that you can spend this money only for a purpose. Or for example, here with the Simply Home is basically that the buyer of a home is bringing all the money needed. So I don't know, 100,000, and then automatically the smart contract based on some events, so the notary or the different events that can enable the settlement or the conclusion of the transactions. When these events are happening, automatically the smart contract is taking the part of the money of this sum and is distributing to the beneficiary. This is basically so all the beneficiaries are sure that they will be paid because they can see the money in the account, but they cannot get the money until the conditions are verified by the smart contract, and therefore the smart contract is distributing the money. So I think that basically yes, I'm done with the presentation, and I don't know if we have some questions no, we don't have questions from the audience. So I think that I don't know if Andrea and Jeff, if you want to to add something or your final thoughts or takeaway of this session.
I think, Daniele, just because we have a couple minutes left, I think that was a fantastic session from my perspective. I mean, we went through some of the challenges with real-time payments, which is the immediate challenge everyone is facing. And then I think the overview of the central bank digital payments and how that plays into the market is the next challenge we'll be facing. And that's a good lead in for people to start thinking about. Andrea?
I agree, Jeff, and I also appreciate a lot the perspective that you have given us on Canada. So that you know, sometimes we used to think about what's happening in Europe because it's normal, but we know that business and processes and solutions are not are evolving at different paces in different parts of the world. So it was very good to get your perspective on that as well.
Yeah, so I think that you know, knowing a bit with our friends of IBM, what's happening in Canada, especially on the payment side, I think that you will have a new RTGS up and running. You will have a new instant payment systems, and you will probably. I've heard that you are also thinking or experimenting the central bank digital currency concept. So I think that you are very ahead in terms of solutions in that space. They are not alternatives. They can collaborate. They can be, you know, they can address different needs, and they can enable the digitalization of the payments that is the core of all the transactions. So I think that this is why we are so passionate on the payments topic, that we are working every day to you know, to evolve all these features. So I think that we are basically done. So we are coming to an end of this very interesting session. So I thank you all the participants of these sessions, and I hope that you enjoy the topics. And enjoy your lunch, and probably here in Italy we will enjoy our dinner. Thank you very much to everybody.
Thank you, everybody.
Thank you, everyone.
Ciao, bye-bye.